own organization, I try to pull from each one of those different areas. And a little bit on the future, just on investor expectations. So clearly, the organizations that we're a part of, I think, really are a nice way of slicing and dicing my business with sustainability within our portfolios through the 3 different surveys that I participate in. We also get surveys from individual investors. They send us surveys, what are you doing in terms of sustainability? So they are driving it themselves, independent of GRESB or other surveys. And then also we're seeing it more and more often in RFPs. So investors, before they invest, say, $10, $50, $100 million with us, they're asking us, what are we doing in terms of sustainability within the RFP process? And again, we need to provide them with those signals of responsibility to really be able to demonstrate that we're doing the right thing. So in closing, the investor expectations, again, environmental performance, social performance, governance performance, all of those metrics are becoming important. And while clearly the environmental performance metrics are a little bit easier, the softer side of social metrics may be a little bit more difficult. It is possible to measure, and there are folks out there doing it. And then clearly the financial performance. The financial performance is critical. Are we reducing risk? Are we reducing operating costs? Can we improve tenant engagement? Can we make the buildings a little bit stickier? I like to call it sticky buildings, keeping the tenants in place. And then improving those risk-adjusted returns. Here's a short note from my compliance team. And thank you very much. And with that, Andrew?
Thank you. Is my mic on? Yeah. No. Well, thank you very much, David. And I'm glad with that legal notice. I'm glad we all had a chance to read that quickly. So, Andrew, over to you.
It's a real pleasure to be here. I had the opportunity to participate in the conference in Toronto last year. And I came away from that with an even greater sense of invigoration as to our green activities across our portfolio. And as a result of that, I've become more involved in the Canadian Green Building Council. And I'm now a vice chair of the Canadian Green Building Council. I'm really looking forward to the next few days for the opportunity to collaborate as well as learn. And I'm very impressed by the sense of collaboration that I saw last year and I'm already seeing this year. So just moving into this, what is Oxford? We're a bit of a difference because we're actually 100% owned by a pension fund. This is very much the Canadian model. Most of the big Canadian pension funds are 15 to 20% invested in real estate. This reflects the need to move away from some of the conventional pension fund investing models, a little higher up the risk reward as we see the profile of the funds and the need, frankly, to fund pension deficits grow. So we're seeing more active, more aggressive investing. Oxford's a 52-year-old company, but it was purchased by the pension fund owners approximately 11 years ago. Just a little bit of background there. So it's a very active direct investor. We're building in Canada. I'm going to talk about that. I'm going to talk about the path that Oxford has been on in the last few years, particularly the period 2004 to present, as it relates to sustainability. I will also talk about what we're doing in the US and the UK, where we have approximately 15% of our